Hello, everybody. This is Boji here, your local Bay Area real estate expert, and welcome back to my channel. As you know, that the current mortgage rate is hovering around 7%, which is causing a lot of buyers and sellers to be waiting on the sidelines. The buyers are hoping the rates will come down so that it'll make their mortgage cheaper. And sellers are also hoping the rates will come down so that more motivated buyers will be on the market shopping, causing their homes to sell for top dollars. So, what is the mortgage rate going to be in 2025? That's what I'm going to talk about in this video. Now, when it comes to mortgage, a lot of people are confusing it with the Fed funds rate. Therefore, whenever they hear on the news that the Fed's going to cut rate or going to increase the rate, they automatically think that it's the mortgage rate that's going to go up or down, which is not true. These are completely two different things. The mortgage rate actually follows the 10-year US Treasury yield, which is completely different from the Fed funds rate. And a lot of the real estate experts and mortgage brokers would also tell you that the Fed funds rate has influence or impact on the mortgage rate. And even in the long term, these two kind of go together, meaning that in most cases, when the Fed lowers the rate, the mortgage rate would also go down eventually, or vice versa. And these situations can be found during 2008 and during the pandemics. However, in the last two major Fed's rate cut happened in 2024, September and December, not only the mortgage rate did not go down, but it actually went up a little bit. So what's going on? Okay, so let me break it down how these two correlates. Usually and typically, when the Feds cut its rate, it's sending out a signal to all the investors on the market. And how does the investors interpret this signal is going to determine what they're going to do. So if the Fed cuts its rate because the economy is getting weaker, then the investors are going to take that in and move all their money from their current money market investments into the bonds market because the bonds market has safety in there. And that is going to cause the bonds to go up. And what that means is the bonds yield is going to go down. And when the bonds yield goes down, the mortgage goes down. So that's when you see when the Fed cuts its rate due to a weakening economy, the mortgage rate also goes down. On the other hand, when the Feds increase its rate, thinking that the economy is going to be great, and that's what the investors also believe. And what the investors are going to do is they're going to move their money from the bonds market into other money market for higher returns. That is going to cause the bond price to go down, and therefore the bond yield to go up, and that's going to cause the mortgage rate to go up. However, what happened in 2024's two major rate cuts? The investors wasn't buying into the stories of how you want them to believe about the economy. The investors think that the Fed's rate cut was inflationary rather than a true weakening economy. And therefore, the investors continue putting their money in the money market rather than moving them into the bonds market, which is causing the bonds yield to go up and causing the mortgage rate to go up. From here, you probably realize that the Fed's action on the Fed's funds rate does not have any direct impact whatsoever on the mortgage rate. What really matters is the investor's expectation of the future market, and that is what's going to cause the the treasury yields and hence the mortgage rates. So if you want to know where is the mortgage rate is going to be headed to, don't just focus on following the Fed's rate cut schedule. Instead, ask yourself this: how do I feel about the economy right now? How do I feel about the future of the economy? How do I feel about the job report, the GDP growth, and how do I feel about the PCE report, the PPI report, and how do I feel about what the collective investor sentiment is? These are much better questions to ask than when is the Fed's going to cut their rate again. And speaking of the Feds, what are their thoughts on the state of the current economy? Well, based on what I've seen, I believe that they're just as clueless. That's why the Feds are not going to do a whole bunch of rate cuts this year compared to last year. And Jerome Powell's is basically saying he's in no rush to cut more rates. So basically, they are in a wait and see state of mind. And what that means to the mortgage rate this year, and this is what I believe, is that the mortgage rate will likely to continue to stay around 7%. There might be times that they're going to go up a little bit, and there might be times that they're going to go down a little bit. But largely for the rest of this year, unless there's some crazy things happen to the world, my expectation of the mortgage rate is going to be still around 7%. So what does all that mean if you're looking to buy or sell real estate this year? Well, for buyers, I would say don't wait for the rate to go down. If it happens, that's great, but don't count on it. If you see a home that you like and you can afford it, it's a good time to get in. And also remember, even if when the rates go down, it does not necessarily mean it's going to save you a lot of money. I mean, I'm pretty sure you all remember what happened during the pandemic when the rates went down to 3%. It's making every house overselling for 20% over the asking price. And you often only have 10 days or 5 days to make your decision, and you have to make your offers with no contingencies, and you have to go up 20% over the asking price. And you may still not even get the house. A lot of people gave up in that market. So that's not necessarily making your home buying journey any easier. Now, at least that the bidding war is not there and you have more rooms to negotiate for certain things. So now is a pretty good time to buy a home. So as long as you find something you like, you could afford, I say go for it. And same thing for sellers. If you're hoping that the rates will go down and then you put your home on the market, I would say don't count on that either, as you never know when that's going to happen. I say whenever you're ready, yeah, put your home on the market. And remember, what's going to sell the house is a proper pricing and a professional marketing strategy, which I specialize. So, having said all that, if you guys have any questions, if you do have plans to buy or sell real estate this year in the Bay Area and you have a lot of unanswered questions, feel free to reach out and I'll be happy to chat with you and share with you my thoughts. And having said all that, I wish you a good one and I'll see you on the next video.